lot easier for people who aspire to trade foreign exchange for a living to actually make it real, because the time you will realize by now that the time taken to become a trader that can trade for a living is not so short, but then this is a shortcut way of doing it. Okay, if you have a trading room of 22 traders plus a chief operating across the street, and their job is to produce trades so that you can be guided in the trading, not just by trend lines. At home, of course, it will be trend lines, but on the premise, we want to be able to put in the trade so that you can see on the TV screen, which is called Rice Bowl TV. That's why I call it Rice Bowl, right? I mean, look at it, that's the Rice Bowl is. And the color of the Rice Bowl TV is palladium, you know, iron, stronger than iron Rice Bowl. You know, the superhero Marvel story, Captain America, the shield, that one, that kind of color. Okay, so there is, we're going to develop a rice bowl that is stronger than iron for you. Okay, then you'll find that trading foreign exchange for a living suddenly become real. Because you have a trading room across the street, the main job is to produce enough quality trades that you have confidence to follow. Okay, and then at some point, you will get to the point where you can just tag. Then, because a lot of scalping trades are not so easy to follow because they're very fast. Within 30 seconds, we are in, we're out, right? So if you give those on premise ability to tag, then you will benefit from the lot of scalping trade that we decide to enter into. Okay, but otherwise from home you will continue to see what you normally will get now. What you want to see here is that nothing is new between yesterday and today. But what is clear was 131.80 the floor, 121.80. Well, I even got the big figure wrong so far. No? 121.80 the floor, 123.20 about the top. That one we have marked it out for a while, and you've noticed that if you don't learn how to trade within this kind of range, a lot of retail traders only know how to trade when things moves a lot. You will find that you'll be sitting out for a very long time, you know. Okay, you'll find that, can you turn this to 1 minute? You will find that you'll be sitting for this period to this period, from here right up to here. How long is that? In the 1 minute chart. 4 days are probably. How many? 154 minutes. So 1 hour is 60 divided by 60 is almost, okay, no, 2.5. This is 2.5 hours on that. Okay, not this segment, the whole segment of 2310 to that. Go to a 10 minutes chart, zoom out further, 30 minutes chart. 30 minutes chart, not this segment. This is easy, yeah. This whole segment, where it is quite directionless. And how many days is that? 385 divided by 2 will be how many hours? 180 hours, is it? 192 hours. 8 days. What are you going to do for 8 days within here? This is 8 days going nowhere. A lot of people lost money in this. The bearish people buy back, the bullish people got stopped out and back and forth. All your 30, 50 pips stop loss are all taken out. Okay, then you call it whipsaw and all that. So every indicator you follow will be killed inside here. Nothing will work in here. The only way to work in here is price action trading. You realize that 70% of the time market is only can be traded with price action. It is only in that 20-30% where they start to trend, then everybody is very clever, you know, moving every crossover and all that. All these are moving over every crisscross all over. So price action trading is quite straightforward. 70% of the trading is in support resistance. That's why it's very important we mark out the lines, and then all the lines more or less contain the market. Okay, it never gets to the 20, gets to there already. So every time it gets to here, it can go all the way back, right? And then the very important level to watch is, you see, every time it gets below the 122, about 70 something, the sharp move comes. All the stop loss are put below there. People who are bullish put the stop loss here, then it comes down. Same thing like this again, comes down. One of the interesting things you need to notice in this chart is that this part is getting higher and higher. Okay, it is getting higher and higher, and this one now, so far, doesn't go below 122.15. Okay, it is trying to trade out of this. It is trying to trade out of a rounding bottom, and then this part is trying to, it's just a question of when, right? So if you do a parallel, you find that we are trying to get out of that. It's just a matter of how long it is, unless, of course, there's some trigger events that break here. So 121.80, if broken, yes, can bring to a new low, because there must be a tremendous amount of stop losses here. All those who buy here will get out at below 121, around 70.80. Okay, then this channel will fulfill itself. But for now, you are looking at a rounding bottom, potentially breakout. Yes, there's a significant resistance here that we talked about yesterday. So once you can get up to here, then you find some form of acceleration may take place. Okay, I'm just telling you what the market is trying to do, not what I think where it is going. You know, I don't really think when. So what I'm just trying to trade is that I know the market is trying to form a rounding bottom. The market is trying to have a series of higher low. I can see buyers coming in to support it. Right, first was below the 80, then the 80, then after that 122, and then now the 15. Okay, so if the market is bearish, then you have to take it down here so that this becomes flat. That might be the first thing that can happen. But until that happens, I have to assume that the highs will get, the lows will get higher one, because the highs are also higher. So that is what I have to assume that the market is doing, which is part of the rounding bottom formation. Okay, this side is lows are lower, this side lows are higher. And if you can cross the 20 here, then I think this will be in sight. And after that, then we worry about it, because there should be higher lows to give you acceleration. All right. Technically, it's like that. So you have to use the support resistance line to trade. They're all marked out for you. Blue is support, red is resistance. And then let's go down to 10 minutes. Okay, the most significant thing to take note of is that the lows are getting higher. So while in a downtrend channel, you find that the lows are getting higher, the highs are also getting higher, except this one. Okay, so it's very important for now to see whether are we getting a higher high, or are we going to be like that to see which side it breaks. Right? Very likely this is a formation, because you have a higher low, you have a slight lower high, so you have a consolidation triangle, and you may see today that you may trade 122.15, try to go to 70, come back down to here and try to break out. I have to assume that it's a first formation. Okay, the most likely trading pattern will be that. So let's try to draw this one, joining this to this. Yeah, just join the last one will do. No, just join the last one. The distance between 2 points, the furthest is the most stable. And then do a parallel. Okay, until it breaks below this one, then I will be concerned. If not, I will be looking at most likely scenario like that. To try higher is the most likely scenario, because I have to respect this until this is broken. Okay, this 80 is still, of course, the most significant. Even if it comes down to 80, for example, it just means from this channel, yes, go back to sideways, that's all. Okay, so 80 is still the most important. Then the rounding bottom is still there, so you will find that you will continue to test the upside and range. Okay, so 8 days, you must learn to trade like that. There's a lot of trade because it's very wide. a lot of opportunities. It's just when you are trading.